$1 million property sounds insane until you realize it might quietly outperform your entire stock portfolio without you lifting a finger. We're not talking about a lucky flip or a hot market. We're talking about a structural, mathematical advantage baked into real estate that Wall Street doesn't exactly advertise. Let's start with the obvious question. How does a single asset beat a market that's returned roughly 10% annually for decades? The answer isn't magic, it's leverage. And real estate is one of the only places everyday people can legally borrow 5 to 10 times their investment and still sleep at night. Think of it this way. When you buy stocks, a 10% gain on $100,000 is $10,000. But when you put 20% down on $1 million property and it appreciates 10%, you just made $100,000 on that same $100,000 investment. That's a 100% return on your actual cash. That multiplier effect is called leverage, and it's the engine behind generational real estate wealth. But nobody talks about the fuel that keeps the engine running, which is your tenant. Someone else is literally paying down your mortgage every single month while you sit back and watch your net worth climb. Now, before you say, but the stock market is more liquid, yes, you're right. And that's exactly why most people never build real wealth in it. Liquidity is a feature that becomes a flaw the moment you panic sell during a correction, which statistically speaking, almost everyone does at the worst possible time. Real estate, on the other hand, forces patience on you like a financial straitjacket. And historically, that forced patience has been a gift. Studies have shown that the average real estate investor dramatically outperforms the average stock investor. Not because real estate is better on paper, but because behavior is the actual variable. Here's where it gets even more interesting. $1 million property generates tax advantages that a brokerage account simply cannot replicate. Depreciation alone can shelter tens of thousands of dollars of income annually from the IRS, which is essentially a government subsidy for owning real assets. We also can't ignore appreciation trends in major metros over the last 40 years, where property values have compounded at rates that rival or exceed broad market indices before you even count rental income. Cities like Austin, Nashville, and Miami have seen property values triple or quadruple within a single generation, turning careful buyers into accidental millionaires. Now look, real estate isn't flawless vacancies. Maintenance, problem tenants, and illiquidity are very real risks that can erode returns fast if you're underprepared. The investors who win long-term aren't the ones with the best properties. They're the ones with the best systems, reserves, and risk tolerance to weather the inevitable storms. The historical lesson here is simple. Every major recession has produced buying opportunities that look terrifying in the moment and obvious in hindsight. The investors who stayed disciplined, kept their emotions out of it, and maintained proper position sizing are the ones writing books about it now, not complaining on Reddit. Misconception check. Many people think you need to be rich to play this game. But creative financing, house hacking, and partnerships have helped ordinary people control million-dollar assets with surprisingly modest entry points. The barrier isn't always capital. Sometimes it's just the willingness to learn the structure before dismissing the strategy. Philosophically, real estate investing is less about picking winners and more about eliminating losing behaviors, impulsive decisions, over-leveraging, under-reserving, and chasing trends. Discipline, deal sizing, and consistency will always outperform genius and timing in this asset class. And that should actually be comforting news. Whether values dip, rates stay elevated, or the market cools for a season, a well-positioned property with strong fundamentals will survive and eventually thrive. And that's a level of durability most stock positions simply don't offer. You don't need a perfect market. You need a sound process and the nerve to stay in the game. So the next time someone asks if $1 million property can beat the stock market, the honest answer is it already has for millions of people, and the math is on your side if you approach it right. The question was never really about the asset. It was always about whether you're ready to stop spectating and start building. If you're ready to take that first step, whether it's real estate investing, finding the right contractor for renovations, or connecting with a lender who actually understands the game, check out our links in the description below, and let's get you started.